Hi, everyone. We're just going to let everybody join and then we will get started shortly.
Do not share.
Rachel, you may want to mute yourself for just a few moments.
Okay.
Thank you. Okay, we're going to go ahead and get started. Well, good afternoon, everyone. I'm Cindy Nellis. I am with the Penn West Clarion Small Business Development Center, and we're glad that you have joined us for Withholding Basics. Today's webinar is a partnership with the Pennsylvania Small Business Development Center and the Pennsylvania Department of Revenue. We've created together a tax series that involves 4 different topics. As you can see, we're on our fourth topic of withholding basics. If any of the other topics you see interest you, we will encourage you to join us for future webinars. And following today's webinar, I will send you that flyer and that schedule so you'll be able to register for the ones that you would like to attend. So whether you're ready to hire your first employee, you are already have employees, or you are looking to pay somebody for performing services for your business, today's training will help you navigate withholding basics for W-2 income and 1099s. You'll learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. And additionally, today's training will touch on withholding for retirement income and Pennsylvania rules for different types of retirement withdrawals. So we're excited that you are here. Before we get started, let me review a few reminders for today's webinar. Following today's webinar, you will receive the presentation slides, all the slides that you see. You will also receive our flyer and the recording of today's webinar and any other resources that happen to be discussed. All of our participants have been muted and video disabled. So if you have a question for our presenter, please enter that in the Q&A. We've got a panel of experts from the Department of Revenue to address those questions. If you have a question for me, your host, please enter them in the chat box and I will address them. So to get started, I'd like to give you a brief introduction to the Pennsylvania Small Business Development Center. Our program is grant funded. Our mission is to help businesses start, grow, and succeed. We're here to provide you, our small business owners, with education, information, and tools to help your businesses make your business and you make better business decisions. We offer business consulting services and we offer training like today. Our consulting services are provided at no cost and confidentially. We can meet in person, virtually, or by phone. However, we do like to meet in person to at least get started. Our training seminars are offered on a variety of topics that target the needs of small businesses. And to us, a small business is generally a business that has less than 500 employees. We also use our funding to provide access to database information and resources related to conducting industry and market research, financial analysis, and implementing marketing strategies. So you'll see our map here. So you would connect, of course, there's no wrong door to connect with our program. Of course, if those in Pennsylvania would connect with the SBDC that covers your county. As I noted, this is our information. We're here to help you. Our statewide network is made up of 15 centers here to provide business consulting services, as I've mentioned. We're also a part of a national program called America's Small Business Development Center. So there are SBDCs all across the United States. This is information of how you connect with us. And so I'll be sending this out as well. We encourage you to connect, become a client of the SBDC so you can access the resources that we have talked about. So without further ado, I'd like to introduce you to our speaker today, Rachel Washington. She is a research analyst in the Customer Outreach Relations and Engagement Division of the Customer Experience Center within the Pennsylvania Department of Revenue. So with that, Rachel, I'd like to turn it over to you.
All right, let me share my screen real quick. All right.
Perfect.
Awesome. All right. So, hi, my name is Rachel Washington. Thank you for joining us today and learning more about personal income tax withholding basics. Once again, I'm Rachel Washington, and I am a research analyst for our Customer Outreach Relations and Engagement Division within the Customer Experience Center here at the Department of Revenue. So a little bit of background about me. I started as a temp at the Department of Revenue in 2018, answering customer questions on the phones. I recently graduated from Temple University in 2022 with a major in post-production and essentially a minor in accounting. I've been promoted to this position where I specialize in creating the Revenue 411 videos, and I help out with a lot of other outreach and education materials that you will see today. So let's get started. So this is a brand new module that we added to our entrepreneurship or new business series to help businesses and business owners understand how to properly collect and remit withholding on behalf of their employees or contractors. So today, we're going to cover a wide range of information relating to withholding tax and the nuances that go into it. We will start with some fundamental information about personal income tax withholding, and then move into the different types of withholding accounts that we have here in PA. Once you have an understanding of what you need to do as a business owner, we will then talk about how to register for a withholding account and talk through filing and paying requirements. After all of that, we will be covering some things you should know about record keeping. So most new business owners don't realize just how important it is to keep good books and records, but please understand this is for your own benefit. If you ever get audited, which by the way is a standard business practice, you will want to be able to show that you have done what is necessary to remain in compliance with the state. And then we will wrap up today's presentation by reviewing some resources that are out there to help you find answers should you have any questions after today. All right. So let's get into the fundamentals. So before we get started, let's define a few key terms that you're going to hear throughout this presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. So the next term here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. So then this brings us to a non-employee. A non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. So as a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments. So the next term is withholding. Obviously, this entire presentation is about withholding, but It is important to note that we are talking about the money that an employer deducts from an employee's gross compensation and then pays directly to the government. So then we have compensation. So PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. So make sure you note that employer withholding is due on all types of taxable compensation, and it is not required on non-taxable compensation. So a common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, any damages, whether by suit or otherwise, for personal injuries or sickness and payments made under Workers' Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. So then finally, we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salaries and wages. Some are required by law, while others are optional. Employee benefit programs, such as pensions, profit sharing, and stock bonus plans, and simplified employee plans, SEP, are established by employers who provide additional compensation to participating employees upon or after separation from service. The complexion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to employees or their beneficiaries, such as child care facilities, life, accident or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, tuition reductions, disability benefits, strike benefits, and dismissal pay. Okay. So, non-cash benefits, which are reportable as compensation under Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are therefore subject to withholding. So taxable benefits include, but they're not limited to, payments made by the employer to help employees with adoption expenses, payments made by the employer to help employees with additional medical or dental expenses not covered by medical insurance, unless allowable as an ordinary, reasonable, and necessary business expense. So like medical expenses paid under a qualifying self-insured medical reimbursement account, such as a medical savings account, are not taxable. So then life insurance payments made by the employer on employees' dependents, that's taxable. Amounts paid by the employer for non-job related education assistance provided to employees or their dependents. Amounts paid to employees in lieu of using vacation days, and payments by employers into pension plans, 401k plans, or other retirement plans made pursuant to the employee's education by salary reduction agreement or through periodic payroll deductions are taxable to employees and should be included in Pennsylvania gross wages on their W-2 forms. So, in general, payments are made by employers for employee welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Additionally, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. Generally, an employer provides a service or property when the company assumes the financial responsibility for the liability or payment. So in other words, the expense is billed to the company, and the company is then responsible for the payments. Therefore, the personal use of an employer's property, whether it's leased or owned, or a service provided by the employer is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided that's not reimbursed by the employer. So, for example, a company seeking to provide transportation as a non-taxable benefit for its employees could use a company van to transport them. So then the benefit becomes taxable when the company reimburses or provides a transportation allowance. So an easy way to put it is if it's money in your pocket, as my trainer says, then it's taxable. So it's important to note that federally excludable, no additional cost services, qualified employee discounts, working condition fringe benefits, or 5 qualified transportation fringe benefits are not considered taxable so long as the employee does not have the choice between cash and the benefit, or the employee does not reduce their salary in order to receive the benefit. For example, a program under which an employee is furnished parking facilities, use of company grounds, picnic areas, or a work facility at no reduction in the employee's salary, and where the employee is not reimbursed for the benefit, provides benefits not considered compensation, and thus not subject to withholding. Okay. So withholding taxes vary by state and local tax jurisdictions. Most states operate like federal government and have tax brackets, meaning the percent of tax taken depends on their income level. However, PA is different. We have a flat tax rate of 3.07%. Remember that, meaning regardless of how much you make, everyone is taxed at the same rate, which is once again 3.07%. That amount of tax is withheld as a credit against the income taxes that the employee must pay during the year. So for PA personal income tax withholding purposes, there are 3 different types of withholding we are going to talk about. The most common is employer withholding, which is then next after that is other income withholding, and then last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may subject you to withholding and retirement distributions as well. By the way, retirement distributions will have their own form of withholding. So, employee versus non-employee. If you are a business owner, hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing services are employees or non-employees before you will be able to decide what type of withholding accounts you need. So in determining whether the person providing service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So, common law rules. These are facts that provide evidence of the degree of control and independence fall into 3 categories. So the first one is behavioral. Does the company control or have the right to control what the worker does and how the worker does his or her job? Financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, who pays for tools, supplies, etc. Type of relationship. Are there written contracts or employee type benefits? Example, pension plan, insurance, vacation pay, etc. And then will the relationship continue? And is the work performed a key aspect of the business? Businesses must weigh all of these factors when determining whether a worker is an employee or a non-employee. Some factors may indicate that the worker is an employee, while others indicate that the worker is actually an independent contractor or non-employee. There's no magic or set number of factors that really makes the worker an employee or an independent contractor, and no one factor stands alone in making this determination. So factors which are relevant in one situation may not be relevant in another. So the keys are to look at the entire relationship and consider the extent of the right to direct and control the worker. So finally, document each of these factors used in coming up with this determination. If it's still unclear whether a worker is an employee or an independent contractor, after reviewing all three categories of evidence, then you're going to want to submit a Form SS8, which is the determination of worker status for purposes of federal employment taxes and income tax withholding. This form can be filed with the IRS. It may be filed by either the business or the worker, and the IRS will review the facts and circumstances and officially determine the worker status from there. So if you're going to do this, please be aware that it takes at least 6 months to get a determination. A business that continually hires the same types of workers to perform particular services may want to definitely consider filing the Form SS8. Okay. So additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to use a Form W-2 and file in duplicate with the PA Department of Revenue. If you hire non-employees, you will need to issue Form 1099 NEC. And if you pay via miscellaneous sources of income, you will need to issue the Form 1099 miscellaneous. In addition, your employee may receive a 1099 if they took a distribution from retirement, but that will likely be issued from the financial institution if that is administering their retirement or pension plan. So usually that company will give it to them. It is important to note that these forms need to be filed in duplicate with both the IRS and the Department of Revenue, regardless of whether there's actual withholding, so long as you paid them more than $600. So once you have determined that you have employees, you need to withhold income tax from their compensation. So since you need to do this, you require an employer withholding account. So Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in two common cases: when resident employees perform services within or outside PA, and when non-resident employees perform services within PA. So to make it simple, if you're a business located in PA or conducting business in PA, you should withhold personal income tax on all compensation paid to PA residents, but you are only required to withhold on PA source income for non-residents. So if they work here, you got to withhold their taxes. If the employee doing the work does not live in PA, but the work is being performed in PA, there is withholding requirement. Whereas if the employee does not live in PA and the work is not being performed in PA, there is no withholding requirement. The PA personal income tax rate is 3.07%, which means you must withhold 3.07% of the gross compensation that you are paying to the employee. We encourage that you deposit this into a separate bank account until you are ready to remit payment to the department. All right, so reciprocal states. The only exception is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. These states are considered reciprocal states, meaning employees only pay in the state where they live. So even though it may be deemed PA-sourced income because the work is being performed in our state, we've agreed with this state not to tax them based on their residency in one of these reciprocal states. So in these cases, the business is not required to withhold Pennsylvania income tax on the PA-sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must submit an REV 419 to you, their employer, to indicate they live in a reciprocal state. You must keep the completed form in their payroll records for 4 years in case of a withholding audit. If a business mistakenly withheld PA income tax for a resident of a reciprocal state, The employee will need to file a PA-40 personal income tax return to request a refund. Okay. If you have determined that you are hiring independent contractors or non-employees to perform services, you may be required to open an other income withholding account. Okay. So you will see on this slide that you are required to open an other income withholding account, when you hire non-employees that do not reside in PA to perform services worth over $5,000 for the year. So per IRS rules, the Form 1099 NEC, non-employee compensation, must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, PA rules state that a non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. So what is unique about other income withholding is that it only applies to non-resident, non-employees to whom you pay over $5,000 annually. This means if you hire a resident contractor or non-employee who lives in PA, you do not have to have a withholding requirement. So in these situations, you will need to file a 1099 NEC to report the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income. Another reason you may have to open an other income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are reported on the 1099 miscellaneous. Okay. A business is required to file the Form 1099 NEC and withholding PA personal income tax if all of the following four conditions are met. So, the non-employee does not live in PA. Payment was made to an individual, estate, trust, or disregarded entity owned by an individual, estate, or trust. Payment for services was made in the conduct of your trade or business. Payments equaled more than $5,000 for the year. Okay. Now, on the other hand, the withholding of PA personal income tax is optional if the payments did not total $5,000 for the year, the non-employee lives in PA, withholding is not required on residents, payment was made to a partnership, corporation, or multi-member LLC. Those entities have their own non-resident withholding requirements, but we aren't going to get into that at this time. And then if the payment was for services not related to your business. So please keep in mind that the payments we are referring to here is anything that falls under the compensation class of income or business class of income. All right, so we also mentioned the miscellaneous income. So here are some examples of miscellaneous income. So these could be royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments made to an attorney, and any fishing boat proceeds. So, for PA purposes, you are required to withholding PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in PA, the business should withhold personal income tax at a rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. Now, if you're renting from something like a property management partnership, or you don't have to withhold. So as mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. So please be sure to follow IRS rules for issuing the 1099 miscellaneous. Okay, so finally, the last withholding account is retirement withholding. As a small business, you will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, just for general information, the Form 1099-R must be filed for each person who made a designated distribution in the excess of $10 or more from profit sharing or retirement plans, any individual retirement arrangements, IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, and charitable gift annuities, etc. So hopefully now you know what kind of withholding accounts that you need. So let's talk about how to register for those accounts. Okay, so registering for business tax accounts is going to vary slightly upon whether you are an existing entity in PA or a brand new entity. So for brand new entities who do not have any existing tax accounts with the PA Department of Revenue, you will want to complete a PA online business registration from the MyPath homepage. So to get started, you will type in mypath.pa.gov and scroll down to the panel titled Registration. From there, you click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is intuitive, so depending on how you answer the questions will determine what questions you're presented with. So once that's complete, you will immediately receive a confirmation number, which you will want to save for your records. Additionally, you can use that confirmation number to create your own MyPath profile. If you need help setting up a MyPath profile, please see our Revenue 411 video on creating a primary user profile. Definitely recommend that video. And if you are an existing entity, say you have a sales tax account and you want to add employer withholding, you would need to create your MyPath profile. Or if you already have one, log into your profile and click on the More tab. It's at the top of the screen. From there, you will find a hyperlink that says Register New Business Tax Accounts. This is very similar to the one on the homepage, but some of the information will be pre-populated for you since you already have existing accounts. Please keep in mind that most of the time, sole proprietors will have what we call existing accounts because their personal income tax accounts are linked to their social security number. So if you are attempting to register from the homepage and you are getting an error message, this is likely the problem. Registering online establishes business tax accounts with the Pennsylvania Department of Revenue, as well as opens employment compensation accounts administered by the Pennsylvania Department of Labor and Industry. So although filing and payments for employment compensation have to be done through Labor and Industry, so you would want to go to them for anything in regards to that. So once you are completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner is required to deduct and withhold tax, must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. So in addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this, online or using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your withholding tax accounts. So Not only are you able to file and pay for the current year, but with MyPath, you're also able to view previously filed returns, access notices that have been issued from MyPath, and e-tides, request statements of accounts that are available immediately, as well as send messages to the department and more, actually. Another very important feature is that you can grant permission to others, like your bookkeeper, to also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov, or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. It's right there. Please note, though, that you must create a user profile to utilize this service. And again, if you need assistance with creating your user profile, please see our Revenue 411 video on creating a primary user profile. It's a good one. If you need help, you can watch our other Revenue 411 video on filing a quarterly W-3. Lastly, the department does have third-party vendors who are approved who will provide e-filing software for customers who do not wish to use the MyPath portal. There is a list of approved software vendors available on the department's website at www.revenue.pa.gov. All right, so payment frequency. Whereas the filing frequency for withholding taxes is always quarterly, the payment frequency may vary depending on the amount of withholding that you are collecting for each quarter. When you initially register for a withholding account, your payment frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the first and second withholding payments, as well as the prior year, third and fourth withholding quarter payments to determine if the filing frequency needs to be adjusted. All right, I'm going to go through some tough information. Trust me on this one. If your total withholding is under $300 per quarter, you would have a quarterly payment frequency. In this case, the taxes are due at the last day of April, July, October, and January. If your total withholding is $300 to $99 per quarter, you would have a monthly payment frequency. For these employers, the taxes are due the 15th day of the following month. If your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. And lastly, if your withholding is $5,000 or greater per quarter, say like $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose paydays fall on Wednesday, Thursday, or Friday, and on the Friday following the pay dates for employers whose paydays fall on Saturday, Sunday, Monday, or Tuesday. So now I know those are a lot of dates and amounts to remember, but thankfully, the department publishes a schedule every year, which is called the REV 1716, which breaks down the filing and payment due dates by filing frequency. All right, so customers may request a payment frequency change if they so desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or by using the send a message feature to submit a written request. As an employer may change to a less frequent payment schedule only at the beginning of a calendar year, so long as the amount required to be deducted and withheld for each quarter is reasonably expected to be less than the criteria amount for the current payment schedule. So, similar to filing the returns, employers can remit their withholding payments one of 2 ways. Our recommended way is the online way via mypath.pa.gov or by using a third-party vendor. So some important things to remember is that Payment vouchers are only available via MyPath, and the use of other tax forms could result in non-filer notification and/or the misapplication of the tax payment. And per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. This is very important. So failure to comply with the electronic funds transfer remittance requirements may result in an assessment penalty equal to 3% of the tax due, not to exceed $5,000. So the penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue and approved payment by an approved payment method. So if every quarter you send in a check for over $1,000, you are going to get hit with an EFT penalty every quarter. If you need assistance remitting your payment via our MyPath portal, please see the Revenue 411 video titled Making Period Deposit Payments. In addition to remitting quarterly returns and payments, employers must also file at an end of the year annual reconciliation, REV 1667. This annual reconciliation not only reconciles all 4 quarterly returns that were remitted, but also reconciles any W-2s or 1099s reported by the employer. If you need help, please watch our Revenue 411 video, Filing a Revenue 1667. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the REV 1667, which then would flag the account for non-compliance. All right, so record keeping. The same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so the PA Department of Revenue may administer tax laws effectively. The general rule is that you have to keep records as long as necessary. So many times this means you must keep records supporting the information on a tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessments is 3 years and begins when a return is filed. If the returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date the tax is paid. To comply with regulatory requirements, an employer must maintain records for each and every employee and how much, if any, of the tax that was deducted or collected during the payroll period. The records must provide a breakdown of each of the following: amounts withheld greater than the required 3.07% pursuant to a written agreement under 61 PA Code Section 113.3b, amounts deducted pursuant to 61 PA Code Section 113.72 for an undercollection or in another withholding period, and amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so make sure you consult their requirements. Okay. So, in addition, your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate, and that you remitted the withholdings to Pennsylvania. To show these things, you must have a documentation showing amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and amount of the tax you withheld from their pay, dates and amounts of your withholding tax deposits. We advise that you do separate deposits for these transactions so they are easily reconciled with your books. Copies of withholding tax returns you filed and confirmation numbers. A standard payroll and accrual account can be used to record this information and will help serve as the basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is taxable only to their resident state. So, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete an REV 419 and retain for your records. Again, as a reminder to you, and as a reminder, if you, the employer, accept the REV 419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold PA tax. Okay, so 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC or miscellaneous forms showing recipient number, last name, rents, royalties, other income, medical or healthcare payments, gross proceeds paid to an attorney, non-employee compensation in box 1, state tax withheld, state income tax, schedule type, and if any corrections were made. We stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding return, W-3. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns, as they will help you in filing your REV 1667 annual reconciliation. So it's important to know that periodically, the Department of Revenue conducts desk reviews or audits in which they review the records of thousands of businesses for tax compliance. This is to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or a sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information resources. This other information includes other tax returns and government or industry data applicable to the business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it is extremely important to ensure you're keeping complete and accurate records at all times. Okay. All right, so some resources. Withholding tax is a very important tax for business owners to deal with, as it is considered a trust fund tax, meaning that the employees are trusting the business to withhold and remit on their behalf. And the Commonwealth is trusting you to make those remittances timely to the Department of Revenue. Let's discuss some resources that are available should you have any questions or concerns following today's module. Some of these have been mentioned previously and are simply serving as a reminder. Okay, so first is the REV 415, Employer Withholding Information Guide. This guide contains all the information that we reviewed here today and more. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds, guidance for payroll providers, as well as phone numbers for areas to contact depending on your question or needs. This is available on the Department of Revenue website at www.pa.gov. You can search under Forms and Information, then go to Forms for Businesses, and then Employer Withholding Forms, or simply type in REV 415 into the search bar on the Homes page. Next is the REV 580, which is our FAQ sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submission, phone numbers, and the website for the online customer service center, which I will go over shortly. Okay, so here we have the REV 588, Starting a Business in Pennsylvania, a Guide to Pennsylvania Taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. All right. This one is very useful and very important. This is the REV 1716. This is the schedule that we put out each year that breaks down filing and payment due dates by filing frequency. My trainer likes to say that this makes great wallpaper, and I agree. The 2023 schedule is published and available under Forms for Businesses, then Employer Withholding, or of course, you can just search the form on our website. In addition to payment due dates, this calendar also breaks down return filing due dates. Very useful. All right, so next we have the REV 1611. This form is used to calculate the interest on all taxes due after January 1st, 1982. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. For 2021, for example, the rate is 7% annual or 0.000192% per day. Okay. So, FAQs, or submitting a question. We strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click the customer service icon directly from our homepage. Here, you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a specific scenario to a trained representative who specializes in withholding tax. We will review your submission and respond within 72 hours in a process that is similar to receiving an email. And lest we forget, the Customer Experience Center has a call center. Here, you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. All right, so if waiting on hold is not something you enjoy in particular, we have a schedule a call feature to request a callback. Simply visit revenue.pa.gov and click on the schedule a call icon down in the gray belt on the homepage. From there, you will enter your name, phone number, and the tax type that you are calling in regards to. And then select the date and time you would like to call from the department. One of our representatives who are trained in the tax that you are interested in should call you back close to your selected time. we do ask that you please allow a few minutes from your scheduled time. We will do our best to maintain the schedule, but this could vary slightly depending on the volume of requests. And again, we are closed on weekends and federal holidays, so you will not be able to schedule a callback during those days. All right, so if you have a question specific to MyPath, for those of you using the portal for filing or remitting, please see our MyPath information page. We have created a vanity URL of revenue.pa.gov/mypathinformation to make this information easy to find. And last but not least, we have created what we call Revenue 411 videos to help with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we encourage you to go visit revenue.pa.gov/videos and see what we have out there. They are really good, I can promise you that. All right, and thank you.
Thanks, Rachel. Okay. So Alicia and Donald and Christine have been doing a great job answering questions. I'm going to launch the poll just for it's just a one question poll we'd like for you all to answer. And then while I do that, Rachel and your team of experts, I just wanted to kind of turn it back over to you guys to see if there's anything specifically related to the Q&A that you think would be best addressed verbally, or to enhance the answers that you provided verbally. Anything specifically there that you'd like to talk about?
So Cindy, I don't think there was anything pressing that we need to address out loud. I would say there were a lot of people who were asking questions about sole proprietorships and such. So if they do have specific questions, they can absolutely reach out to the department and we can try to help further assist them.
Okay. And Alicia, I did see that you posted a lot of resources in the chat.
Mm-hmm.
So I'll go ahead and copy and paste that into my follow-up email as well.
Great,
And so, super. Okay. So Rachel, thank you so much. This information was well received. I appreciate your time. I know it's a lot of information, and we're glad that you were able to be with us today. With that, I just want to do a quick reminder that following today's webinar, we will be sending the recording to today's webinar, the PowerPoint slides, the additional resources. And then in addition to that, I'll be sending a link right after today's webinar with an evaluation form. So the SBDC is looking for your feedback, not only on today's topic, but we also are looking for other topics that you would be specifically interested in. And while I say that, one of the things that we're always looking for from you as we look to 2024 and additional webinars that the Department of Revenue would address, so those specific tax topics that maybe aren't included in the tax series for 2023. So if there are topics that you would like to see training on, now would be a great time to throw it in the chat, or certainly you can always let us know. All right. So with that, I don't believe I see anything else. I'm going to go ahead and end today's webinar. Thank you all so much for being with us. Rachel and your team, it's always great to have you a part of our webinars, and we look forward to next month. We'll be getting back to, I believe it's Pennsylvania. I'm not quite sure what it is. I need to look this up, but I'll be sending out the flyer. So we'll be looking forward to seeing you second weekend, September, Wednesday at noon for another topic on taxes. All right. Thanks, everyone. Have a great day.